The video you're about to watch is sponsored by life insurance that you can get in as little as 5 minutes. In fact, you don't have to talk to anyone and you can Apple Pay or Android Pay for it. Link down below, metkevin.com/life.
Hey everyone, me Kevin here. We've got an update to talk about regarding CCIV. To get us started with what the HE double hockey sticks is going on with CCIV, let me give you a little bit of a preview of basically exactly what frickin' happened from February 16th. Here's a February 16th video. Take a listen to this.
Because this is just a rumored partnership, that valuation number could change and can have a big impact on the stock. A lot of people are really excited about this announcement to happen because there's a thought that as soon as Lucid confirms the CCIV merger partnership, people are going to plow into the stock, which I think is true. But if the fundamentals of the deal change and all of a sudden the valuation comes out higher than expected because CCIV is getting fewer shares, whew, it's going to be bloody. It's going to be bad. So,
yeah. Okay. I guess we have a little bit of talking to do. A little bit of splaining to do to figure out what the...
Hey everyone, me Kevin here. In this video, you're going to learn how the suits screwed the retail investor again. But not only how the suits screwed the retail investor, but how the suits convinced Bloomberg News and Reuters, a newswire service, both extremely reliable publications, to pretty much lie to our faces. Now, many of you are well up in the stock. Many of you, especially those of you in my course on stocks and the psychology of money, have been in the stock since around $18 or $19 per share, maybe even a little bit before that. And you're up double even after what happened today. But some of you are in the stock higher, and ultimately all of us are wondering, where do we go from here after what happened today? Because after all, what did even happen today? Well, here's an easy way to explain what happened today. First, on January 11th, Bloomberg listed an article, or released an article that stated Lucid Motors was going to potentially be going public via the Special Purpose Acquisition Company, or SPAC, ticker symbol CCIV, which stands for Churchill Capital Corporation number 4. In fact, I have that publication right here, and this becomes very important because in this publication, we will be able to see that CCIV was basically taking, or was planning on taking Lucid public at a future valuation of up to $15 billion, which we can see right here. A transaction could be valued up to $15 billion. Now, the phraseology here ends up becoming a very important lesson for us all to pay attention to, but we'll circle back to phraseology and how the suits like to screw the retail buyers. But anyway, in this article, we were told that the transaction could be worth up to $15 billion, and other publications picked this up and said, oh, okay, so Lucid's going to be worth $15 billion. And after this article, the SPAC that was listed for $10 per share pretty much skyrocketed. We bought it around $18, $19 per share, which again isn't as early as some people bought it, but hey, that did very well. In fact, over the next month, the $503,000 I put into this particular stock went to over $1.5 million, a gain of over $1 million, or 3x. That was when the stock went to all-time highs of $64.85. Now, one of the reasons the stock tripled is because after the January 11th article, Reuters released another article on February 16th, just a little over a month later. And in this February 16th article, Reuters stated that CCIV is, quote, nearing a deal with Lucid Motors. This finally gave validity to the rumor that, oh my gosh, Lucid is probably, very likely, going to be striking a deal with CCIV. This started putting to rest rumors that some dude named Chamath was going to come along and steal this deal from CCIV and try to take Lucid public himself. In this article, in the Reuters article, Reuters stated that the deal could be worth up to $12 billion and removed the phrase transactional value. Take a look at this. That'll become very important in just a moment. Reuters. A luxury vehicle maker, Lucid Motors, is getting close to a deal to go public at a roughly $12 billion valuation after Michael Klein's blank check company CCIV plans to take them public. This was said by people familiar with the matter on Tuesday. Okay, got it. So some people let Bloomberg and Reuters know that Lucid could potentially be worth $12 to $15 billion after a partnership. And this news from Reuters actually helped pump up the stock substantially, because this might seem like a subtle difference, but this becomes very important, the little change that happened here. And there are a couple changes that happened here. The easiest way to understand this is simply to draw this out in the simplest terms possible. So take a look at this. On January 11th, Bloomberg says CCIV is going to go public at $10 per share via the SPAC, and it's going to value the deal at $15 billion. It's going to value Lucid at $15 billion, which is great. But then on February 16th, we hear that, oh, wait a minute, at $10 per share, Lucid might actually be going public with a $12 billion valuation for Lucid. And the reason this matters is because let's say that over here in the month of January, Lucid stock is selling for $40 per share. Well, $40 per share is 4x $10 per share, which 4 times 15 billion is about a $60 billion public valuation for Lucid. This number becomes very, very important. If you didn't see how I got that, I'll explain one more time really quickly. At $40 per share for CCIV, when you look at the stock CCIV at $40 per share, that's 4 times $10 per share. That means the valuation goes up 4 times. 4 times 15 is $60 billion. Okay, should be on the same page now. Reuters came out on February 16th and said, no, up to $12 billion per share. Okay, a lower valuation. That actually is a good thing. That means we are buying a company at a lower price because a lot of us already bought the shares. It just means the shares we bought represent a cheaper company, which means it has more of a potential to go up, which is a good thing. You want to get in at a lower valuation. Anytime you do like a private equity deal in the future, which you will in the future, especially if you follow the channel and the lead here, I'm going to guide you through all this kind of craziness that goes on out there. Then you'll quickly realize you want to buy things at lower valuations, not higher valuations, but that should make sense in public markets as well. Okay, so going back to this, if, let's say, this is now a $12 billion valuation, like Lucid Motors said, well, then what we can do is we could say, okay, well, what if the stock is trading for 5 times $10 per share or $50 per share? Well, 50 is 5 times, so 5 times 12, look, that's also $60 billion. In other words, because of this Reuters article, the stock of CCIV was totally able to go from $40 to $50, literally no change in valuation at all, simply because the underlying valuation of Lucid was changed, which is crazy. Okay, great, but why does all of this old stuff matter relative to what happened today? Well, here's why. Remember when I played that video at the beginning of this video to you from February 16th? In fact, here's the thumbnail. This is what it was. Posted 1 week ago, is Lucid Motors CCIV stock a big mistake? When I posted this video, look at some of the comments that I got, and these are real comments. If you're so negative about this company, why not just dump it and buy it again at $30? That's obviously what the person meant, because a lot of people are like, oh my gosh, Kevin, you're being so negative about this company. Why don't you just sell it and buy it again when it falls then, if you're gonna be so negative about it? Then this person says, you added nothing new concerning if CCIV is merging with Lucid. Your title is misleading. My title is misleading? Is CCIV stock a big mistake? Well, I'm providing concerns, and I do answer whether or not it is a mistake in the video, but okay. Anyway, so people are angry because I had a negative title and I wasn't as posh as I should be, I suppose. But here's a good one. Look at this one. This one takes the cake for best comment right here. You are the most skeptical, pessimistic person on CCIV on all of YouTube, especially for a guy who supposedly invested $500,000. It's like you don't want Lucid to challenge your beloved Tesla. Wow, really? The Jade is like level 10,000 here. Look, folks, I can't, Look, folks, I can't make this up. This is an actual Webull. It actually shows when I bought the stock for how much I bought it. Like, this is literally my actual Webull account. I can't make this up. I'm not that good. So, I don't think there's any question as to whether I actually realistically own this stock. I think a lot of times when I make videos, I just provide both sides of what could potentially happen to a stock. It could be good news, there could be bad news. And what was the warning that I provided? Let's listen one more time, and then let's understand what the heck actually happened today. Listen to just these 10 seconds, very, very closely. It's very important. Which I think is true, but if the fundamentals of the deal change, and all of a sudden the valuation comes out higher than expected because CCIV is getting fewer shares, whew, it's gonna be bloody. It's gonna be bad. So, guess what happened? Folks, the reason CCIV fell today is because the valuation came in substantially differently than what was expected. Lucid Motors and the staff at Lucid Motors ended up realizing, oh damn, the stonk market really likes our stonk. They like the stock. Lucid Motors could potentially renegotiate the deal we have and make a whole lot more money. Think about it. Let's say you're selling a house for $500,000. There's one offer on it. And you say, you know, the evening that you get this $500,000 offer, okay, I'll take the $500,000 offer. It's a verbal deal. I'll sign the deal tomorrow. Very next day, you wake up, and all of a sudden there are 5 offers on your house, and the highest offer is $600,000. Yeah, you made a verbal deal, but you technically didn't sign anything. So why not just call up your agent and go, hey, real estate agent, I want some more money for my deal. I want everything renegotiated. Well, folks, enter what happened today. Here's the first news update that came through the Bloomberg terminal. Churchill Capital 4 shares currently trade on the New York Stock Exchange under symbol CCIV. The companies Lucid and CCIV are going to combine at a transaction equity value of $11.75 billion. Well, when I first heard that, I'm like, oh my God, that's amazing. It's a lower value than the $15 billion that Bloomberg told us about. Remember this? A transaction could be worth up to $15 billion from January. Or how about this? It's actually lower than this $12 billion valuation from Reuters. Oh my gosh, this is really good news. Like, this is awesome, right? That's actually less than what we thought this was going to be valued at. Oh, but wait. Then the stock starts falling because the very next news update that comes through the Bloomberg terminal, folks, is this. Lucid Motors agrees to go public through merger with Churchill Capital. Okay, good. Solidifying the rumors. This is very good news, right? The companies are combining at a transaction equity value of $11.75 billion. Okay, great. We already knew that. That sounds awesome. The transaction values Lucid at an initial pro forma equity value of approximately $24 billion at the PIPE offer price of $15 per share. Right there, the suits screwed us. A 50% premium to CCIV's net asset value. Holy crap. What happened here? Remember the homeowner example where the homeowner wakes up one morning and goes, wow, I have more offers, I want more money? Folks, that's exactly what happened here, in my opinion, between Lucid and CCIV. And this is just my opinion. Don't sue me, CCIV or Lucid. But my opinion is they realized that this stock was going to the freaking moon, and Lucid went over to CCIV and said, look, we need more money. And CCIV's like, oh man, we kind of already mentioned that, you know, we were gonna have a transaction valued of up to 15 bill, and Lucid's probably like, oh, well, we can have a transaction valued up to 15 bill, but the value of Lucid could be more than that. It could be $24 billion. And basically we could raise more money at the expense of the retail investor, which is really frustrating because look, we're not making this up. Yeah, in the initial Bloomberg article, they said a transaction could be valued up to 15 billion. But folks, Reuters said would go public at a roughly $12 billion valuation. That means Lucid is probably going to go public at around $12 billion. Well, it's actually going public at twice that, a valuation of $24 billion. And that creates some big issues. Basically, here's what they did to us, In plain, simple English, on January 11th, we thought the valuation was going to be $15 billion, which means at $40 per share of CCIV, the company's worth $60 billion. On Feb 15, we thought, oh my gosh, it's going to go public at $12 billion, because that's what Reuters said. Reuters didn't say transactional value $12 billion. They said the company valued at $12 billion. Reuters clickbaited us. The suits clickbaited us. And that would have implied that at $50 per share, the company would have had a $60 billion valuation. Well, because the company is actually going public at $24 billion at pegged to $15 per share, then $60 billion actually equals $37.5 per share. Which, folks, the company right now in after hours is trading for about $40 per share. So right around $64 and a bit billion. $64 and a bit billion is basically the same as $50 a share a week ago or $40 a share a month and a half ago. We just got clickbaited in the meantime by the news cycle, which is really, really frustrating. So where does that leave us today? Well, at about $64 billion, which is roughly where the valuation is now at $40 per share, this company is just shy of the size of GM, which is valued at about $74.9 billion. It's worth more than Xpeng by twice. Xpeng is only worth $30 billion. And it's worth $16 billion less than NIO's $80 billion market cap. It's obviously a far cry from the market cap of Tesla, but for a company with a lot of potential and promise, there are a lot of folks really excited about Lucid. So my strategy going forward, and I know that there's a big 71-page slide deck presentation. I'm not going to read through all that hoo-ha here in this video. I will be providing my breakdown analysis on that, but you got to be careful. Usually that's just a big marketing pitch, so you got to be very careful on that. I just wanted to use this video as an opportunity to explain what the heck happened in the share price today. Why did we see this massive decline of 30%? Why would the share price plummet like this? It's because of the revaluation that happened. It's that simple. Does it mean the company is all of a sudden a fundamentally different company? No. Does it mean we got clickbaited by the suits and taken advantage by the suits? Yes, we got screwed by the suits. Does it mean that the company is all of a sudden not going to deliver its car in June or July and start selling vehicles? No, I think there's actually a very good chance of seeing the Lucid vehicle hit the roads or hit roads in June or July, sometime this summer. We'll see. So I'm very excited about the stock. I'm still bullish. My opinion, based on these new valuations, is that this stock is probably something I'll add to if it gets under $40 per share. Which it did very briefly in after hours. I mentioned to course members these price targets already while after hours were still open. I explained all of this to course members in a little summary pitch that I sent out to everyone. So there is a big value for you being in the course if you want to get information right away. That's where I can quickly send a message out and get it out to you instantly. Make sure to check out that coupon code down below, HODL or HODL, however you'd like to say it. Go to that website and check out the course. You pay once and you get lifetime access to all my alerts and my content. But anyway, to me, yeah, today this valuation, this revaluation, it's a bummer. The price obviously got hurt because of this revaluation. It also means that if this stock goes up to like 60 or 70 bucks a share, it might start meaning, okay, maybe we got to start looking for the exits a little sooner than we had to before. Now, I'm not going to set any hard exit price for this. Certainly, if I made any changes, I'll send alerts and I'll make a video on it. But for right now, I will say that this stock for me is a buy under 40, and it's a heavy buy under probably like under 32, under $30 a share. I'd buy this more heavily. Until then, I might just nibble on it under 40 if it falls under there. Revaluation happened. It's still a great company. Many of us are up 2x on our money. I'm diamond handing this thing. It's a great company. This is just a full detailed explanation of the shenanigans that go on in the stock market. Hopefully you found this helpful. If you did, consider sharing what happened today so people can learn from this. And folks, we'll see you in the next video.